Because Canada and the United States are fighting about trade and making things confusing. Canadian leaders are now looking for new friends to do business within Asia and Europe. Imagine waking up and finding out your biggest customers and best friends are secretly doing business with someone else behind your back. That's what's happening to the United States right now. Countries around the world are changing who they want to be friends with. Business deals that used to happen automatically are now going to other countries. And Canada is winning these deals super fast. More than $120 billion in new business deals have gone to Canada since early 2025, from special rocks and minerals to fancy computers. Canada is taking the place of the U.S. in businesses that people thought would never change. But how did this happen? Today, we're going to tell you about the top 7 countries that are now choosing Canada over the U.S. as their main business partner. Wait until you see who's number 1 and what this means for the next 10 years of world power. Let's jump in. Number 7, Australia. You might think Australia and Canada were already best business friends. But this new change is really surprising. For many years, both countries did business in the same groups. They were both part of the British Commonwealth, had Pacific trade deals, and believed in similar things. But in 2024, Canada didn't just sell more stuff to Australia. Their sales jumped up by almost 40%. Beating what the U.S. was selling in important areas. This wasn't just luck, it was planned. And now people who watch trade in both countries are asking the same question. How did this business change happen so quickly? People who know about trade deals say this isn't because the countries were already friends. It's because Australia really needed help. Earlier this year, the United States made Australian beef and medicine more expensive by adding extra costs called tariffs. This messed up the normal ways things were shipped around the world and caused problems in global markets. At the same time, Canada jumped in with special trade deals that let them sell things to Australia without extra costs through something called the Trans-Pacific Partnership. Canadian machines, parts, precious metals, and car pieces started flowing south quickly and reliably. What happened next was Australian companies and government buyers got worried and quickly switched to buying from Canada to avoid the U.S. trade problems and keep the export business running smoothly. One great example, a mining company in Sydney recently changed over 20 orders for big, heavy machines from U.S. factories to factories in Ontario, Canada. They did this just weeks after the U.S. tariffs started, saying Canada was faster at customs and didn't charge extra fees under their trade deal. That one deal alone was worth tens of millions of U.S. dollars and was part of the almost 40% increase in goods Canada sold to Australia last year. On the other side, Australian money started flowing north to Canada. Real estate companies in Vancouver and Toronto are now working with eco-friendly mining companies in Western Australia, building new joint businesses in carbon-neutral rock processing and environmentally safe extraction methods. It's not just trading stuff back and forth. It's investing in each other's businesses. What the official numbers don't show is the bigger business thinking. Australian business leaders see Canada as a reliable backup plan, an alternative trade path that protects their supply chains from political ups and downs. Canada gets strategic positions in Australia's resource-rich landscape in return. Experts watching this change closely believe it shows a bigger transformation is happening. Canada is no longer a side partner in Australian trade. It's becoming the main partner. And Australia's government agrees. Recent government statements name Canada as a priority trade friend, talking about shared energy policies and working together on renewable mining technology. For Canadian companies that sell stuff abroad, this partnership means more than just selling more products. It represents spreading out their business so they're not relying heavily on the U.S. When companies depend too much on the U.S., they can get hurt by Washington's changing trade policies. With Australia now a solid customer, Canadian steel, machinery, chemicals, and car parts can now be sold through stable, layered trade agreements. That means better prices, fewer roadblocks, and more long-term contracts. It also opens doors for working together on new inventions. Australian universities and Canadian technology companies have already started working together on sustainable mining and machine automation. Workshops and test sites are now happening in Alberta and Western Australia. From a world perspective, This shift shows something really important. Canada is smartly positioning itself not as a backup choice, but as a trusted trade partner in the Indo-Pacific region. That's a bold change from the past when Canada's sales to Australia were mostly overshadowed by American dominance. Now, with this almost 40% jump, the story has flipped. Canada is sending equipment south, Australia is sending investment money north. And both governments are celebrating a new chapter, one built on spreading out business, being strong, and sharing industrial ideas for mineral and farm product exchange. The next shift takes us to energy, where Canada is becoming really important. Are you noticing more countries doing business without the U.S. in the room? If this trend matters to you, hit subscribe. We uncover the quiet deals that are changing global power. Because in this economy, what you don't see can hurt you. Number 6, Japan. A whisper in Tokyo meeting rooms is turning into loud noise at Canadian ports. What started as just talking has turned into real business deals, and it starts with natural gas for years. Japan got most of its energy from the United States and Middle East countries. Tokyo's power plants, chemical companies, and car-making industry all counted on steady shipments of liquefied natural gas from the U.S. This was normal. But in early 2025, when the U.S. added extra costs to electric car metals and industrial goods, Japanese trade officials had to make new plans. That change showed an opportunity, and Canada stepped in. Experts tracking East Asian energy flows say that Canada's new liquefied natural gas shipping terminals in Alberta and British Columbia are red. Why to beat U.S. producers to market with faster delivery times and less political confusion? One senior energy expert in Osaka said that Japanese utility companies have started signing multi-year contracts with Canadian suppliers because Canada doesn't charge extra fees. Under the Trans-Pacific Partnership trade deal, and has a solid reputation for following rules. These developments aren't just ideas. A Japanese power group recently bought the first full shipment of Canadian LNG that's set to leave in late 2025. Marking a big moment in trade between the two countries, the move wasn't loudly celebrated. It was quiet, smart, and forward-thinking. But energy is just the start, along with fuel deals. Canadian mining companies have entered into joint businesses with major Japanese industrial groups to MAC. These supply chains work better for cobalt, nickel, and rare earth elements, materials that are really important for Japan's growing electric car and robot industries. These agreements didn't happen by accident. They were made out of necessity. Japan needed to get supplies from different places because Washington's increasingly unpredictable trade position threatened to disrupt materials that are at the heart of Japan's economic future. Canada fits that need with reliability, flexibility, and similar policy thinking. One good example comes from Kyoto, where engineers are now building prototypes with battery-resistant metals from Canada, working together with Japanese car makers and Canadian mineral companies. The design is on purpose, lock in energy and raw material sources that aren't affected by one-sided American tariffs or political pressure. It's a safety plan dressed up as industrial innovation. And people close to the situation believe it's just the beginning. Government officials in Tokyo and Ottawa have quietly scheduled yearly energy meetings to support ongoing coordination on low-carbon fuel technologies and critical mineral supplies discussions. That didn't exist a few years ago. For Canada, this isn't a distant victory. It's a strategic home run. Companies that sell stuff abroad in Alberta and British Columbia are already reporting record contract values. And Ottawa is celebrating the spreading out of Asia-bound trade beyond shipments of wood, seafood, and cereals. Investors are paying attention. 2, major Japanese banks have provided bridge money for pipeline extensions and mobile gas solutions targeting Canadian energy clusters. That level of cross-border finance marks a new phase. Canada and Japan are partnering not just on exports, but on export infrastructure and supply chain strength. Few outside the world of trade diplomacy appreciate how huge this is. Japan is the world's 3rd largest economy. Its embrace of Canada for critical energy and material flows signals global confidence in Canada's reliability and no longer sees the U.S. as the only logical path. That is a huge shift in global supply chain thinking. Before you think that's the peak, Wait and see the next country whose entire industrial foundation is being rebuilt with Canadian materials. Number 5, South Korea. Picture a country whose entire technology economy runs on being exact, consistent, and on time, where a delay in raw materials can mess up billions in export money. That country is South Korea, and until recently, much of that exactness relied on the United States. But something changed.